Hi, today's Sunday, April 14th. We're taking a look at the S&P 500 as we get ready to trade April week 3. Monthly OPEX, we have a holiday shortened week this week. U.S. markets closed on Friday. European markets will be closed Friday and Monday. And Japan might be closed. I don't know. I'd have to look that up. But in any case, um, holiday shortened week, so business all gets taken care of one day sooner because they're going to have all the options expire on Thursday this week rather than Friday, and that includes an extra day early for S&P 500 options. They'll expire on the open on Thursday rather than the open on Friday. So the monthly, the April options are only going to be trading through Wednesday at the end of the day. I have a thing where I don't really like to trade options that expire in less than 2 closes away, which is why I sometimes use those Mondays if I'm doing a day trade on a Thursday or a Friday. But I don't want to commit to the the following Friday options yet. I'll use those Mondays for that reason. So applying that same rule, I'm probably not going to really trade the April options past tomorrow. If I open up a new trade on Tuesday, I might look out into options that expire after we return from that holiday after that holiday weekend. Okay, hopefully that makes sense. Here we're looking at the S&P 500 cleared out with just this channel. This channel is really just a demarcation of the head and shoulders pattern that we're seeing here. And the way you usually find a target for a head and shoulders pattern is you draw a line from the top of the left shoulder through the neckline or the bottom part of the right shoulder. And ultimately, that probably should be from here to here. But I drew a line here that's a lot less bearish in order to make the top line a lot more of a harder bar to cross. Because if I drew this from, say, if I drew this line from here to here and put a channel on here, you'd see that our breakout point came right here at the top of the making of this left shoulder. But I wanted to give you something, to sort of put to rest this whole idea that we're in a head and shoulders pattern and see, exactly how close we are to actually foiling it. And in doing so, I took this much less bearish way of marking the target so that this line is a lot less angled. And so you can see that even with this is probably the least angled channel that I can put on this. So even looking this way, you've seen that these moves that were made at the end of March were all breakouts out of this downwards channel. And now all we have to do is make a new all-time high, and we will have foiled this pattern altogether. There is still a chance that we could get within just a few points of the all-time high, roll over, and sell off for a couple of months. Certainly that could happen. But probably what's more likely going on here is that we're going to, we spent a lot of time taking care of this last gap, second to the last gap here. This was actually the gap when we look in a little closer here. This was actually the gap that, led from the 9th to the 10th of October. And then the final gap is this last one up here that comes from the very, very beginning of the sell-off that was going on after we had made our all-time high in September, and then we started into October and Q4, and we couldn't take out that all-time high. So I think, we could certainly just fill this gap and then roll over, but I have a feeling all we're going to do, even if we roll over, is come back down and back test the top of this channel and then move on out from there. So say that happens this week, say, tomorrow or Tuesday afternoon as we wait on Netflix earnings, we filled this gap, and then the earnings come out and they're not very good and the whole market sort of rolls over to end the holiday week and we come back and sell off some more. Maybe we would trade all the way back down to here, and you could see the worst that would happen is about 100 points. And most of our sell-offs after we hit an interim top have been about 100 points. They've been between like 90 and 100 points. So I would say that's probably the most likely scenario if we do get into a sell-off. And the 50-day simple moving average, you can see, is rising pretty quick. And in a few sessions, it would be right here at the top of this channel. So that would make for a nice, clean back test of the channel, test of the 50-day, gather strength, and have one more rally before we get into sort of like the summer doldrums that we often see, late spring, early summer doldrums that we see as we get through. Once we get through that that first big batch of earnings, sometimes the end of May and through to the beginning of June, we sort of like flounder for a while. That might be, what we do. We just end up chopping for a little bit after we make this nice back test and chop for a while and then come back later in the summer and finally make that all-time high. But in any case, the whole point of this rambling session here is to show you that we're more likely in an inverse head and shoulders here than we are in an overall head and shoulders pattern. And I did a little video last weekend in addition to the whole overall weekend video that showed you this idea that, no matter how you drew this, it really wasn't a substantial argument that we are in a head and shoulders pattern and that we're going to break down and fail from there. But anyway, so that's that. Let's take a look at our roadmap as we get to start the week. You can see we tried to make our little V formation here, and instead of selling off and rolling over from it, we gapped up open on Friday. And now we just need to see a couple days of follow through. And in those couple days of follow through, like I said before, we'll probably fill the gap at 29.25. If we fill the gap at 29.25 and continue on, then we have the failed Q4 high. This is the double top made in Q4, the 29.39.86 level. If we get up here and fail that, that's going to instigate a lot of people into thinking that we are making a huge double top, or triple top even, that we made our all-time high and we failed to make the new high a couple of weeks later, and now here, several months later, we're still not able to make that high, and that would be at that point where maybe the market might roll over and come back down and ultimately back test this channel and the 50-day simple moving average as it moves up over the next few sessions. And the start of that selling will require a break of the 10-day simple moving average. This is moving up very quickly. As you can see, it's already up into the trading range of what we were doing late last week. It's already up over, closed at 28.83.79, and it's moving at quite a clip. It's probably going to be all the way up in here at 28.90s as we open tomorrow, or close to it. And then by Tuesday, if we're still floating up here, this is going to open up and probably be right at 2,900, if not taking a look above it. And maybe that's what the market is waiting for that 10-day simple moving average, that average closing price of the last 2 weeks, to dare to rise to 2,900. And that's when everybody's going to say, okay, this is definitely overbought, and pull back. And the pullback needs to come back down and touch the 10-day. If we come back down, touch the 10-day and bounce off of it, maybe we're going to chop for a while. But as you can see, the 10-day, the 20-day, and the 50-day are really stretched far apart. So what we're more likely to get is to go ahead and break that 10-day and come on down here and maybe test the 20-day. The 20-day itself has risen quite a bit. It's risen through this gap. As we started off the week last week, it was just approaching this gap, and by the time we ended the week, it's passed through this gap, and it's all the way up here now to 28.52.76. So that's going to rise some more. As we get further into the week, it's going to be all the way up here with the 10-day above it at 2,900 at that point. So if we break 2,900 and the 10-day simple moving average, maybe we're going to come down here and test the 28.60s. That would be back testing the high that we made in Q3, the March high. If we break the 20-day, then the order of business usually is that we work our way down to the 50-day. And once again, that brings you back to this overarching chart here, where what we're really doing is back testing this channel that we broke out of right here with the April open right here. This was the big breakout. So it would make a lot of sense then that if we're going to come back and back test this channel, that it is taken care of, along with testing the 50-day, along with testing through all these simple moving averages. And that act of doing that is going to bring these closer together, and it's going to sort of prime the pump and pave the way for another nice move up, at which point I think then we'll take out and we'll make a new all-time high. Okay, if I'm being way overly bullish on this idea, then of course we're just going to keep working our way down, and we're probably going to be coming down here, fill in all these gaps that we've made now on the way up. These are what these purple bars stand for. Fill in all these gaps, test the center of this falling channel and the 100-day simple moving average, which is curling up very nicely. Going to pass through the center line of this channel and be here in this gap in the next few sessions. So if if we're in for a really big sell-off of more than 100 points, because just to get from here to back test this, the top of this channel is about 100 points. That's been sort of the average of our sell-offs lately. If the market wants something much deeper than that, then maybe we're going to go all the way to the center of this and test the 100-day simple moving average. Even if we did something as hair-raising as come all the way down here and test the bottom of this channel, you can see that all we would be doing is testing this first leg up from the rally as we came into the year. So even that isn't that bearish. It would probably be, I'm sure there are a lot of fund managers that would love for this to happen and would love to load the boat with this, because we know, based on the news, that the administration is blaming anything wrong with the stock market with what's going on with the Fed, anything wrong with the economy with what's going on with the Fed, and that this president is going to do everything in his power to make sure that we have a rallying stock market, especially as we get into heavier into campaign season for the 2020 election. Okay, I hope that was good enough for you on a Sunday video to get you ready to start the week. Like I said, you know, if we top out at 29.25 and we come back down, we want to test and see if we can hold above the, you know, where we traded and closed the week out Friday. And then ultimately, if we lose 2,900 again and trade on down, we're going to be looking for a back test of the 10-day simple moving average. That's going to be our first test of strength for the market here. Okay? Have a good rest of your Sunday. Enjoy Game of Thrones. Hope you got your taxes done. As always, good luck and good trading.